And I want to do a chart that's ongoing now that we can still possibly take advantage of with limited risk to the market. So here we have in the market, we have markup in the Canadian, this is US dollar, Canadian dollar. So we can see the markets in an uptrend, vertical absorption. We can tell vertical absorption because it closed our high end, and we have little buying tails. Market's going down and then closing higher. So the buying tails, this is all part of this what we call vertical absorption. Okay? Vertical absorption. It's not spelled correctly. So let's spell that correctly so we don't get beat up for it. We call vertical absorption to the market. The closer tend to be high end to mid high range, markets going up. The first sign of trouble in paradise is this bar here. The volume increased a little bit. So the volumes are the same as this volume, and these moves are the same. Someone higher up decided, well, you know what? I'm going to sell the secondary test of this market. Maybe the market went up, quite a bit. So the market has a retest, more selling, and we get to the point that we see the markets. This was the low we talk about before the reaction high. This is important. We draw that across, form some type of range now to the upside. And the market decides that, okay, no supplies coming into the market here. We have some long liquidation, no supplies coming to the market. This is absorption. You can tell by the closes, high end towards the creek. And then we have a situation where if this was absorption to go higher, we should see the market going higher, right? We do go higher. But what does the market do? The market sells off. Okay. So the story, this is really important. The story is here, where the sellers took on the buyers. But the story becomes here with absorption. The key to absorption is to continue markup. You don't do absorption to mark down or to get weak. We go up, everything's perfect, and then we sell off. SPAR tells you that's stopping action to the market and see what happens. Since the market does not spring the market, this is part of your LPSY, where it goes back into this range. Goes back into the range. And the range. And immediately fails. But that's what LPSY and LPS are supposed to do. Boom. It comes down and kind of labors on the rally. The trade that we do is the trade right here. This is an up thrust after distribution. Since they're selling in the background, there is cause and spacing to the markets. Where we go, this is an up thrust and distribution. Market went sideways for a while, forming its cause and spacing. Now the market on the right-hand side, this is labored 1, 2, 3, 4, 5, 8 bars to go up, 1 bar to go down. The wave here is weaker than it is down. We get a trigger of an up thrust in the range above a resistance area because up thrust of distribution and the immediate effect to the downside. So this we considered here the sign of weakness to the market. Sign of weakness to the market. And now the market is continuing on its merry little way. So we have a change of character where the bears finally start saying, hey, that's enough. Still some buyers left. Buyers were new highs. They sold it off. The market breaks shock tacos. The market, which we get to the point to where up thrust of distribution from the weakness, or you want to call it LPSY, the middle of the range, you can do it as well. What the key thing is that you're looking for a market that has a reaction. So this is 1, 2, 3, 4, 5, 8 bars to recover basically 2 bars. The speed up is slower than the speed down. The bars up are smaller than the bars to the downside. The essence of distribution of a stock and the fact that the safest trade would be the UTAD, right, on the close. You have definitive risk there. There are several entries wise when you wouldn't have gotten stopped out, even though the market did come back. So that's what I want to talk about in regards to that. And now we have accounts probably down to the 130 level, down to here. So quite a bit of go. Probably good market. Thank you. Okay. Any questions? It's really I can't express to you how messed up that I think my anyway, these little videos that I plan on doing all the time is something that I think is important, and I want to be able to package them up and send them to look through. Nothing beats the aspect of the live trading that goes onto the room, and the more that we could do live trading, as far as examples as are happening, not examples that did happen. The essence of the essence is getting really nice with this stuff. So yeah. Sorry, I got what the, so pack these videos for everybody and charge a nominal fee for them and have them have sensitive things. This way you get kind of collection of live trading setups during the day, and you emulate them during the day. And I think that's important. Some put me in 2 rooms. So let me stop the video. All right. So I got chopped up at the end. So I was trying to get the overview.